high volatility, high uncertainty. It's like that early stage of institutional adoption. But really, we start mainstream institutional adoption, I would date it to January 2024 with the approval of the ETFs, the spot ETFs. And I think it runs, we have about a 10-year gold rush. It runs to 2034 November. Between 2024 and 2034, we will have mined 99% of all the Bitcoin. So Bitcoin becomes, for all practical purposes, fixed by November of 2024. The last 1% comes out over 100 years. We have this 42-quarter period. You think it's not much, but I mean, 5% is a lot over 10 years compared to 1% over 100 years. So there's actually still Bitcoin available for sale right now. The miners have to sell it. So at the beginning of this period in Q1, we're in Q1 now, if you go to January 1st, no institution could buy it even if they wanted to. It just wasn't on their radar. So you really have 42 quarters of people learning what it is, studying it. It takes 10 hours to scratch the surface, and it takes 100 hours before you get a degree of comfort. Most people, once they get past the age of 40, they don't want to spend 100 hours learning a new thing. It's very rare. So you've got Wall Street firms spinning up massive education apparatus. You've got a whole set of stages of adoption. First, can I buy it? Then is it on the approved list for solicited sale? Then it is on the approved list for unsolicited sale. Is it marginable? Can I borrow against it? Is it optionable? Can I hedge it? Is it recommended? Is it structural? Is it built into a fund? That's like 7 layers of adoption. People take a year to think about each of those layers. There's 100 powerful entities that control huge amounts of money that'll go through that in the Western world. So I think we're in this institutional education stage. In 2034, it'll simply be the new thing.
Bitcoin has entered a new phase of institutional adoption that will drive prices to new heights. This is the Bitcoin Gold Rush era. It started in January 2024 and will last until November 2034. You only have a 10-year window to accumulate as much Bitcoin as you can, the greatest asset of all time. This is the latest message out from Michael Saylor. In his most recent interview, Michael Saylor spoke about Bitcoin's role as perfect money, emphasizing its qualities as a decentralized and finite digital currency immune to inflationary pressures. He warns that fiat money, controlled by governments and central banks, is on the verge of collapse due to excessive money printing and its diminishing purchasing power. According to Saylor, the biggest challenge for Bitcoin lies in achieving mainstream acceptance and overcoming skepticism from traditional financial institutions and investors. However, this is rapidly changing, shown by the Bitcoin ETFs being the fastest growing ETFs in all of history. Make sure to stick around to the end of the video where Michael Saylor reveals why Bitcoin's price is still not anywhere near its full potential. Also guys, only a small percentage of my viewers are actually subscribed. If you enjoy staying up to date with finance content, consider subscribing or liking the video. It's free and you can always change your mind. Now here's Michael Saylor with why fiat money is collapsing in real time.
Let's talk about Bitcoin. So I want to talk about abundance, Pete. I have one observation, which is the whole essence of Bitcoin is about creating perfect money and the discovery of what we call digital scarcity as a digital scarcity as a commodity basis for sound money. Another one of the tropes in the community is when money is abundant, everything else is scarce, and when money is scarce, everything else in the society is abundant. If you go to Zimbabwe, or you go to Venezuela, or you go to any country going through hyperinflation, when they print the currency collapses. As the currency collapses, everyone in the economy doesn't want to take the currency anymore, and you get ripped back to Stone Age barter. And so, like in Nigeria this week, the Naira went from 400 to the dollar to 1,600 to the dollar. Wow. So in an economy where the currency, that's a 75% currency debasement in a week. When that happens, and I see you in Nigeria and I want to buy your house, next year, well, the issue is, well, with what? And what will it be worth next year? You'll buy it today or you won't buy it at all. How do I sign a 12-month contract if the money's going to be worthless in 9 months. So there are no term contracts. How do I trade with you if you have to trade with someone else and the supply chain is 18 months long? When the currency unwinds and the assets unwind, the supply chains break. When the supply chains break, specialization of labor breaks down, the entire economy breaks down. Eventually, everyone has to grow their own food, right? You want abundance. You don't actually grow your own food in your backyard, right? Productivity drops by a factor of 100 to 1,000 if you can't solve this coincidence of wants problem. So you need sound money, and it needs to work across time and space. And the currencies that we use as a medium of exchange, they might be tradable over parts of space. Right now, by the way, it's probably illegal to actually pay someone in $1 in Nigeria. You see capital controls all over the world, especially when the currencies collapse, the capital controls go in place. So you can't trade money, or you can't trade the currency across borders. And of course, you certainly can't trade the currency with your future self 10 years from now. And how do you even trade a currency? In collapsing countries, you'll find nobody wants to sign a 3-year contract because the local currency is not going to be worth the same amount in 3 years. So you have a hard time trading in time with counterparties or in space. And so the key to abundance is fixing the money problem. The primary impediment to corporate adoption by publicly traded companies is that indefinite and intangible accounting is toxic to the P&L and to the balance sheet. So no company with a healthy business that's fairly valued by the market, or no company run by a management team that doesn't have voting control, would ever adopt indefinite and intangible accounting, because what it does is it doesn't just obscure your balance sheet, it also obscures your P&L. It even mixes investment gains with operating gains and investment losses with operating losses. So it, in essence, renders 100 pages of financial irrelevant. And the current accounting is you can't even pro forma it out. So not only does it make all of your accounting non-comparable across periods, it makes all your accounting non-comparable across competitors, and it also ties your hands with the ability to explain that. So we were a unique company, a unique place. And by the way, I don't think we would have done it if it hadn't been for COVID. If the world had not shut down, I don't think we needed COVID to hit. You need wars, right? People will say, I don't believe in flying an airplane, and a war hits and they start embracing air power. People will tell you they're not going to embrace, whatever it is until the war hits. So we had a war, the economy shut down, and then we had the central bank take interest rates to zero. But they didn't just take them to zero. They also, we had the head of the central bank give a speech saying, I'm not even thinking about raising interest rates until the year 2024. So they took them to zero and basically signaled they were going to peg them at zero for 4 years. Now, that didn't quite happen, right? A lot of banks wished it had happened. I mean, the people that believed it got caught on the wrong side of that trade, and Silicon Valley Bank and the like crashed because they believed what was said. But the point is, there was a crisis. We had a need. We were a very special company in the right time at the right place. Yeah, I think that the biggest challenge of Bitcoin is that the industry refers to it as a cryptocurrency, and oftentimes people refer to it as a digital currency, and there's a very vocal contingent that wants it to be a currency, and the rest of the world doesn't really understand money. So that being the case, let's view this from first principles, right? Money's economic energy. If you want to store your economic energy, you put it in an asset. And the assets have different half-lives with which they store the energy. Economists will say money is a store of value, medium of exchange, unit of account, and they stop, and they don't really think much beyond that. And then they'll bark at you that you don't have money because this is not good for a medium of exchange, but nobody really thinks about what they just said. So if you thought about it, you would realize that that about 120 currencies in the world are mediums of exchange. The peso is a medium of exchange. The naira is a medium of exchange. So weak currencies, the Turkish lira, the Lebanese pound, they're mediums of exchange. You can find a lot of them. The Venezuelan bolivar, medium of exchange. But if you go to South America, you'll find that it's not a unit of account. If you go to Argentina, the unit of account is the US dollar. And they think in terms of dollars. So there are only 3 currencies in the world that are units of account. They're the euro, the dollar, and the CNY. And so why is that? Because the mediums of exchange are weak currencies inflating at 14 to 24% a year. They're losing their economic energy over 3 to 5 years. The half-life of the money in the asset is about 5 years or less. Sometimes it's only 5 months. Like in the naira, they lost 75% of their energy last week. So the medium of exchange only is dictated by the government as legal tender. Every government that's functional will dictate their currency as a medium of exchange and enforce that. The unit of account is generally the dollar, the euro, and currencies pegged to the dollar, and the store of value. Well, nobody in the United States thinks the dollar is a store of value. No rich person. If you look at wealthy people, they would say the store of value, if they're really wealthy, if they're billionaires, they own buildings, blocks, huge properties, or they own the Patriots. They own a sports team, a soccer club, or they own a collection of Picassos. That's what the wealthy use as store of value. The middle class store of value is the Vanguard 500 or S&P index. It's SPY. So the world today consists of 120 mediums of exchange, about 3-4 units of account, no currencies or stores of value. And if you say to someone, what do you think about Bitcoin as digital currency? They say, well, I think it threatens the dollar. I hate it. If you said, what do you think about Bitcoin as digital property? If you simply conceptualize it as property, which is store of value, all of the objections, all of the straw man objections, like it's used for money laundering, it's not legal tender, I can't buy coffee with it, it's not fast enough, it's not private enough. All of these things disappear because it's about as stupid as saying to Bob Kraft, you can't buy a cup of coffee with the New England Patriots by breaking off one of your tight ends, and you can't buy a cup of coffee with your building in Boston. So of course I can't. You can't buy a cup of coffee with part of a Picasso, the lower left corner either. But, wealthy people have been using them as a store of value and as money for 500 years. Why is Bitcoin better? It's better because the problem with storing billions of dollars in a building is the building can't run and the building can't hide, and everybody knows a rich person owns the building and therefore we're going to tax them. I just give you a simple question. I'm going to give you $1 billion right now. I'm going to drop you in Africa. What building in Africa are you going to buy in what country and hold for 100 years? There is, not to disparage Africa, there's not a single piece of real estate in a single country in Africa that any of you would be wise to purchase if you had to hold it 100 years. On the other hand, if you held $1 billion worth of Bitcoin in Africa, you'd probably still have the money 100 years from now. And if you lost it, it's because you lost it, not because it was taken from you. Everybody walks past the biggest tower in the city, and they look up and they say, there's a person with more money than me. And then they think, why don't we tax them? What are they going to do, move the building? Right? You're not going to move the building. And so then they walk past the parking lot, and they think, well, let's just go ahead and put a zoning restriction on that so you can't actually build on that parking lot. So at the end of the day, your property is getting rent controlled, expropriated, taxed, etc. And so it's the best idea in the 20th century.
So there's Michael Saylor with his views on Bitcoin's journey towards mainstream adoption and its potential to reshape the financial landscape. His emphasis on Bitcoin's attributes as perfect money and its ability to serve as a hedge against fiat currency instability proves the importance of decentralized digital assets in today's uncertain economic climate. Before we go, a quick reminder for those who are keen on staying updated in the fast-paced world of crypto and Bitcoin, consider subscribing to our daily 5-minute crypto newsletter. It's a concise resource for the latest expert predictions, breaking news, and top on-chain analysis trusted by over 50,000 subscribers for insightful crypto investment information. Click the first link in the description to join our community and elevate your crypto investment knowledge today. Anyway guys, hope you all enjoyed today's video and that provided you with some value. I'll see you all in the next one, and as always, all the best.